crypto fans, welcome back to CoinTalk Podcast. Today we're diving headfirst into a topic that's got the whole market buzzing, how the U.S. labor market might just hold the key to Bitcoin's next big move.
It's a fascinating connection and one that really underscores how intertwined Bitcoin is with the broader financial landscape.
Totally. And we've got some fresh data and expert opinions to unpack, so if you're watching on our CoinTalk Podcast YouTube channel, make sure to hit that like button and subscribe so you don't miss any of these deep dives.
Let's jump right in.
Okay, so first up, we've got a bold prediction from quantitative analyst Benjamin Cowan.
He's making waves by suggesting that the upcoming U.S. labor market data could actually determine Bitcoin's direction, especially the unemployment rate.
He's putting a lot of weight on that single number. Why is the unemployment rate so crucial in his analysis?
What's fascinating is that Cowan believes a specific unemployment rate range between 4.1% and 4.2% might be the sweet spot for Bitcoin. It suggests a Goldilocks economy strong enough to support growth, but not overheating, to the point where the Fed slams the brakes with aggressive rate hikes.
So that kind of stability could actually boost investor confidence, leading them to seek out riskier assets like Bitcoin.
Exactly. But here's where things get really interesting. Cowan outlines two possible scenarios.
Okay, let's hear.
Scenario 1. If the unemployment rate stays within this 4.1% to 4.2% range, he predicts we could see Bitcoin rally in February and March, mirroring a similar pattern from last year.
Interesting. So there might be some historical precedent for this kind of price action?
Potentially, but as always, past performance isn't a guarantee of future results.
True. What about the other scenario? What happens if the unemployment rate deviates significantly from that sweet spot?
That's where things get dicey. Cowan warns that if the unemployment rate swings too high or too low, it could inject a big dose of uncertainty into the market.
And uncertainty usually spooks investors, right?
Absolutely. It can trigger a ripple effect impacting everything from bond yields to the Federal Reserve's policy decisions. And those decisions can definitely have a major impact on Bitcoin's price.
So it sounds like we're in for a nail-biting few weeks as we wait for that next round of labor market data. Speaking of which, what does the current picture actually look like?
Well, the latest report released just a few weeks ago on January 10th gave us a glimpse into December 2024.
And those December numbers paint an interesting picture, don't they? An unemployment rate of 4.1% sounds pretty good on its own, but coupled with a whopping 256,000 jobs added, that suggests the economy might be humming a little too well for Bitcoin's short-term prospects.
It's a bit of a paradox. On the surface, strong job growth seems positive, but it could actually delay the Fed's need to cut interest rates.
Hold on, help me understand this. If a strong labor market keeps interest rates higher, how does that negatively affect Bitcoin?
Think of it this way. When interest rates are high, it creates a sort of opportunity cost for investors. Suddenly, those safe, predictable bonds start looking a lot more appealing than a volatile asset like Bitcoin money flows shift, and that can put downward pressure on the price.
Okay, that makes sense. But haven't we been seeing some mixed signals lately? I mean, we just talked about strong job growth, but weren't there also some hints of a cooling labor market?
Yes, that's the interesting part. While December's job growth was unexpectedly strong, more recent data from the week ending January 25th showed initial jobless claims dropping to 207,000. That's lower than anticipated, suggesting layoffs remain low.
So that sounds like another positive sign, right? Low layoffs usually point to a healthy and stable job market.
True, but there's a nuance here. While layoffs are low, hiring has also slowed down, which could be an early indicator of a cooling labor market.
So we've got these competing forces at play, strong job growth on one hand and signs of a potential slowdown on the other. It's enough to make your head spin. If you're watching this on our YouTube channel, CoinTalk Podcast, drop a comment below and let us know what you think. Is a strong economy ultimately good or bad for Bitcoin?
It's a debate that's raging right now, and one that the Federal Reserve is grappling with as they try to navigate this complex economic landscape.
Right. The Fed's role in all of this is absolutely crucial. And before we dive into their recent actions, I want to remind everyone to subscribe to CoinTalk Podcast on YouTube for more deep dives like this. We're breaking down complex crypto topics every week just for you.
Now, getting back to the Fed, they've already implemented a total of 100 basis points in rate cuts since September 2024.
So they've been trying to stimulate the economy a bit, but what's their current stance? Are they leaning towards more rate cuts or holding steady?
Well, their most recent meeting on January 29th provided some clues. They decided to hold the benchmark interest rate steady at 4.25% to 4.50%, acknowledging ongoing inflation concerns, but also keeping a close eye on the evolving labor market situation.
So it sounds like they're in wait-and-see mode, trying to strike that delicate balance between supporting growth and keeping inflation in check.
Exactly. And it's worth noting that not everyone agrees with this cautious approach.
Here's where it gets really interesting. You're talking about former President Donald Trump, right? He's been pretty vocal about his criticism of the Fed's actions.
Yes, he's been advocating for more aggressive rate cuts, arguing that the Fed's current policies are actually contributing to high inflation.
It's fascinating to see how these political perspectives intersect with economic policy and ultimately influence market sentiment. We'll be right back after a short word from our sponsor. Don't go anywhere. This is CoinTalk Podcast, and we're just getting started.
Welcome back to CoinTalk Podcast. Before the break, we were dissecting the intricate dance between the U.S. labor market, the Fed's actions, and of course its potential impact on Bitcoin.
And I bet a lot of our viewers on the CoinTalk Podcast YouTube channel are on the edge of their seats wondering what it all means for their crypto portfolio.
Absolutely. So let's connect the dots and see how these forces directly affect Bitcoin's price.
I'm ready. Give me the lowdown.
Well, as we've touched upon, a robust labor market, while seemingly good news overall, can present a bit of a conundrum for Bitcoin. It's like a double-edged sword.
How so?
On the one hand, it signals a healthy economy, which generally creates a positive backdrop for all assets, including Bitcoin.
But on the flip side, as you explained earlier, a strong labor market might actually delay those much-anticipated interest rate cuts that many investors believe could be a catalyst for a Bitcoin surge.
Precisely. Remember when the Fed keeps interest rates higher for longer? It tightens those financial conditions, making riskier assets like Bitcoin less appealing compared to those safer options with guaranteed returns.
So it's almost like a seesaw effect.
Yeah.
A strong labor market pushes Bitcoin down, while a weakening one could potentially lift it up.
That's a great way to visualize it. But there's another piece to this puzzle that we need to factor in Treasury yields.
Ah, yes. You mentioned those earlier, explaining that lower Treasury yields tend to benefit Bitcoin.
Exactly. When yields on those government bonds go down, it eases financial conditions across the board, making risk assets like Bitcoin relatively more attractive to investors. Plus, it reduces competition from those safer fixed income investments.
But you also said that a surprisingly strong jobs report like the one we saw for December could actually push those yields higher.
That's the catch-22. If the labor market data comes in hotter than expected, it can spook investors, making them think the Fed won't be cutting rates anytime soon. This can cause a flight to the US dollar, strengthening it and making risk assets like Bitcoin less appealing.
Okay, so Bitcoin is walking this tightrope between economic data market sentiment and the Fed's policy decisions. It's no wonder its price can be so volatile.
It's true. And let's not forget where Bitcoin is currently trading around $104,000. Stable but gradually cooling labor market, like we saw hints of in the recent jobless claims, data could set the stage for a Bitcoin rally mirroring what we saw last year.
So there's a chance history might repeat itself. That would be great news for Bitcoin holders.
There's always that possibility, but it's far from a certainty. Any significant swings in the upcoming labor market data in either direction could introduce a lot of volatility.
It sounds like we're in for a wild ride,
Yeah.
folks. Buckle up and stay tuned to CoinTalk Podcast for all the latest updates and analysis. Hit that subscribe button on YouTube and turn on notifications so you don't miss a thing.
Absolutely. We're your guides to navigating the exciting and often unpredictable world of crypto.
Speaking of exciting, I want to circle back to something we touched on earlier. Remember when we talked about former President Trump attributing high inflation to the Fed's focus on social and environmental issues?
Yes, he's been a vocal critic of their approach, arguing that policies promoting domestic energy and deregulation would be more effective in tackling inflation.
It highlights the fact that there are multiple schools of thought on how to address these complex economic challenges, and those different perspectives can definitely influence market sentiment.
It's a reminder that Bitcoin's fate is intertwined not just with economic data, but also with the political landscape and the prevailing narratives surrounding these issues. It's a multidimensional puzzle for sure.
And one that we're trying to piece together here on CoinTalk Podcast. So if you're finding this discussion helpful, hit that like button and share this video with anyone who might be interested in understanding how the labor market impacts Bitcoin.
We're passionate about demystifying these complex topics and empowering you with the knowledge you need to navigate the crypto world with confidence.
So as we wrap up this part of our deep dive, what's the key takeaway our listeners should be focusing on? What's the one big idea they need to remember?
I think the most important takeaway is this. The labor market is a crucial piece of the puzzle when trying to decipher Bitcoin's price movements. A stable, gradually cooling labor market, much like we saw hints of in the recent data, could pave the way for a potential Bitcoin rally.
But any major surprises in the upcoming data could send Bitcoin on a roller coaster ride.
Exactly. Those labor market reports are going to be critical. They could very well hold the key to unlocking Bitcoin's next big move.
So everyone watching on the CoinTalk Podcast YouTube channel, mark your calendars and get ready for those upcoming data releases. We'll be here to break it all down for you, analyzing the numbers, dissecting the Fed's actions, and helping you understand what it all means for the future of Bitcoin.
Consider us your one-stop shop for all things crypto. We're here to make sense of this ever-evolving landscape together.
But before we move on to our final thoughts, I have a question for you and for everyone watching out there. Given everything we've discussed, do you think Bitcoin will follow last year's pattern and rally in the coming months? Or do you see a different path ahead?
That's the million-dollar question, isn't it? And honestly, it's impossible to predict with certainty. But here's what we can do. Equip ourselves with knowledge. Stay informed about the latest developments and be prepared for whatever the market throws our way.
Well said. Knowledge is power in this space, especially when it comes to navigating the twists and turns of the crypto market. And hey, if you have any thoughts or predictions of your own, we'd love to hear them. Leave us a comment below this video on our CoinTalk Podcast YouTube channel. Let's keep the conversation going.
We always love hearing from our amazing community. Now let's shift gears and explore another fascinating angle that could have big implications for Bitcoin's future.
All right, so we've established that the labor market is this crucial factor influencing Bitcoin's price action. But here's something that's been bugging me as we've been talking on. Isn't there a bit of a paradox at play here?
What do you mean? I'm intrigued.
Well, we hear all the time about Bitcoin being this inflation hedge, a safe haven asset that's supposed to thrive during times of economic turmoil.
Yes, that's a common narrative, especially among Bitcoin proponents.
But then we're saying that a strong economy with low unemployment might actually be bad for Bitcoin because it could delay the Fed's rate cuts.
You've hit on a really interesting point, and it speaks to the evolving nature of Bitcoin and how its perceived role in the financial system is constantly being debated.
Exactly. It's like Bitcoin is trying to find its place in this complex web of interconnected forces. So if it's not behaving like a classic inflation hedge in this current environment, what is it? What role is it playing?
I think it's crucial to remember that Bitcoin is still relatively young in the grand scheme of things. It's only been around for about 15 years.
Right. It's still in its early stages of development, and its price is still heavily influenced by speculation and those short-term swings in market sentiment.
Precisely. So while it might not be acting as a textbook inflation hedge right now, that doesn't mean it won't evolve to play that role more prominently in the future.
It's all part of this grand experiment, right? As Bitcoin matures and gains wider adoption, its role in the financial system might become clearer.
Absolutely. And speaking of wider adoption, there's a development we haven't discussed yet that could have significant implications for Bitcoin's future. Did you know that the state of Illinois might be considering creating an official Bitcoin reserve?
Wait, really? That's huge. It wouldn't be the first time a government entity has explored holding Bitcoin as part of its reserves, though.
You're right. El Salvador grabbed headlines a couple years ago when it made the bold move of adopting Bitcoin as legal tender.
And now Illinois might be following suit, at least in terms of adding Bitcoin to its reserves. What do you think the implications of that would be?
Well, if Illinois decides to take the plunge, it could create a domino effect, encouraging other states or even countries to consider adding Bitcoin to their reserves. That kind of institutional adoption would be a game changer for Bitcoin's legitimacy and its long-term price potential.
It would be a huge vote of confidence from a major U.S. state. It feels like we're at a tipping point, doesn't it? Like the world is slowly but surely waking up to the potential of cryptocurrencies.
Oh, I think you're right. And as more institutions and governments embrace Bitcoin, it could further legitimize it and drive even greater adoption.
And who knows, maybe one day Bitcoin will even achieve that status of a true inflation hedge that everyone's been talking about.
Anything is possible in this rapidly evolving space. That's what makes it so exciting.
Absolutely. Well, folks, it looks like we've reached the end of our deep dive for today. We covered a lot of ground, from analyst predictions and labor market data to the Fed's crucial role and even the potential for Bitcoin to become an official reserve asset.
We've explored some fascinating angles today, and as always, we encourage you to do your own research, stay informed, and never stop learning.
And if you enjoyed this deep dive, make sure to hit that subscribe button and the notification bell on our CoinTalk Podcast YouTube channel so you don't miss any of our future episodes. We've got lots more exciting content planned.
We're here every week breaking down complex crypto topics and helping you navigate this incredible world.
And before we sign off, head over to the comments section and let us know your thoughts. What stood out to you from today's discussion? Do you think Bitcoin will rally in the coming months, or is a different path ahead? We're eager to hear your perspectives.
Let's keep this conversation going. Your insights are valuable to us and the entire CoinTalk community.
Thanks for joining us on this deep dive into the world of Bitcoin and the U.S. labor market. Until next time, happy investing.